Good morning everyone. In this video we're going to go through the May trade of the month for the top 30 US equity pairs in Pair Trade Finder Pro. And today we're going to review an exit that occurred on May 18th on a pair that we really like that's been in the top 30 since December, and that's NYSE versus Sasoil. And that's had two good trades since December. First one here made $541, and the one we're going to review today made $708.03 on an exit on May 18th. So first, let's take a look at the respective profiles of the two companies to understand whether or not they are fundamentally correlated the way we would hope them to be, and the way that the numbers are showing that they are. So if we go to the profile section of Yahoo, you can see that NYSE is a major. Was the previously owned government-owned oil and gas major of Italy, and it engages in oil, gas exploration and production, electricity generation and sale, and petrochemicals. It's based out of Italy, obviously, but it has E&P operations all around the world in 46 countries with a very strong concentration in Africa: Libya, Angola, Congo, Nigeria, Algeria, Ghana, and Mozambique. And it's a fully integrated major. If we look at Sasoil, this is a South African oil and gas major. It's integrated chemicals and energy company, they describe themselves. It operates through mining, exploration and production, energy-based chemicals and performance chemicals. And they again have a wide international activity base. And their oil and gas exploration is in Mozambique, South Africa, Australia, Canada, and Gabon. So it's a smaller company, but involved in very similar activities. Obviously a very strong African focus as well. So what we'd like to do then is take a look at them a bit more closely on financials and decide whether or not we do think these two companies are similar enough to justify the justify the correlation and co-integration we've seen in the past testing, to give us comfort to trade in the future, that they're going to continue to be correlated and co-integrated going forward. So just very quickly, we'll look at, there's a few metrics that I look at just to see whether they're in the same ballpark. So the market cap is 60 billion with an EV of 84 billion. And if we go to Sasoil, you'll see that the market cap's 23 billion with an EV of 30. So, NYSE's about 2.5 times bigger, but that's okay. They're both almost mega caps, so they should be trading in a similar size range. If we look at very quickly, if we look at some of the valuation metrics like price sales, price to book, EV to revenue, and EV to EBITDA, on Sasoil we've got about 7 times EV to EBITDA, and about 1.4 times price to book, 1.6 price to sales. We've got price to sales of 0.8 on NYSE, which is fairly different, so there's something going on there. Price to book of 1.12, and EV to EBITDA of about 5. So one's at 7, one's at 5 on what I consider to be one of the sort of closest metrics, which is the enterprise value of the business to its EBITDA stream. That would say to me that they're not too far off, and I always look at the leverage and cash position to see whether one of them is highly levered and the other isn't. So we have total debt to equity here of about 49%, and lots of cash on the balance sheet for NYSE. And then if we look at Sasoil, we've got on the balance sheet again 1.2 billion of cash, almost 8 billion of debt, and almost the exact same debt to equity ratio. So we're looking at businesses that are in the same business, levered the same, one's 2.5 times the other, but when you get down to enterprise value on EBITDA, they're valued in a pretty similar fashion, and on a price to book, they're valued in a pretty similar fashion. So all things equal, we're pretty happy that these two companies are going to trade more or less in a similar way to fundamental factors affecting their sector. So that's the review of the financial comparisons and the profiles of the business. So how did they do in back testing? If we go to a back test, and again, if you want to pull up the historic back test, just go to the pair on your watch list, right click and go view back test results. Okay, so what happened? The back test for this pair, there were, in the past 3 years, there were 15 trades, which is a great number of trades. So statistically, we're looking pretty good. It's significant what's going on here. Average correlation of 62%, pretty good. Co-integration of 0.89, that's fantastic. So it's highly co-integrated and well correlated. The compound annual growth rate based on the trade parameters of the top 30, which is a 2 entry stretch and a 0 exit stretch, delivered a very nice set of results here. You can see 24.27% compound annual growth rate with only an 8.9% maximum drawdown. Importantly, profit factor of 0 means there was 100% winning trades. So every trade won over 3 years in 15 trades, which is pretty extraordinary. If you look at the ratio chart, back and forth, back and forth, back and forth over a non-trending ratio over the last 3 years, this is fantastic. This is really, really what we want to see. And if you look at the equity curve, it kind of reflects that. So you've got, successful trade, successful trade, successful trade, successful trade, successful trade, successful trade. So boom, 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 boom. We're going bottom left to top right, smooth and continuous. Gross profit over 3 years, $10,711. Commissions of $1,500. This is based on 0.25% commissions and slippage. Well below the 20% that we use as sort of a top end. And net profit of $9,190. The average net profit of trade about $612. And again, 100% winners. Just fantastic to see these sorts of stats. Let's go here. Average days in trade. I always look at this, about 23 days. So these have also delivered these trades pretty quickly. So that's when we look at the current 3-year back test. Everything we see here is very positive. Would make us really want to trade this pair. Now, what I look at next is just to graphically see whether that co-integration is at play and the correlation. You can see that they're broadly correlated, but more importantly, the co-integration, which is, when they diverge, do they come back? So when these lines diverge, do they come back again? You can see that happening here, comes back, happens here, comes back, happens here, comes back, happens here, comes back, happens here, comes back. So that looks great. They look very co-integrated, and that's just reflecting what you see in the back test results. Then what I like to do, well, first off, let's see what happened here. So we had an entry trade signal called on the 23rd of April, and let's go to the pair charts. Give me 1 second. Here's the pair charts. So now you can see with version 1.3.3, you can see all the entries and exits on your charts. So this entry triggered at 23rd of April. Sasoil was at 35.40, so we went long. We went short any at 39.29, and this triggered at 2.42 plus standard deviation. So right there. What do we like or not like about this? Well, let's analyze these charts a little bit. First off, is this at an extreme, or is it breaking out? And the answer is no. It seems to be well within the range of where the ratio has been over the last year, so nothing to cause us concern that it might be starting to trend. Also, it's back and forth over a relatively stable line during the last year. So on a ratio chart basis, we like this. It's not trending, and we're not looking at a breakout. How is the correlation in the 90 days prior? Well, okay, where are we? That's the entry signal right there. I could always chart this, but you can see the correlation is very strong previous. What about the RSI? RSI was almost at a maximum, but what's more important here is there a divergence? And here you'll see what's been happening with the ratio. Rising, but what's been happening with the RSI? You've got a divergence here. It's been falling. While this has been rising, this has been falling. So that's a divergence. It's a very good signal that this may be about to turn around. So when we see that that's a big positive that this may be a trade we want to take. And so that's a quick look, and as you can see, 2.5 here, well within the range of the last year in terms of how many plus minus, and so it doesn't seem like anything crazy is going on. It just looks like a great signal. Let's see what generated it. We have to check the news, check earnings, and check dividends, see whether we might be able to get a clean entry here. So if we do that, sorry, let's just go here. First, let's check news. So I go to the trade is on the 23rd of April. So if you look here, previous to the trade, do we have any fundamental value affecting news in like 4 or 5 days previously? And the answer is no. There's some typical business news coming up. There's a big investment announcement, but this is all part of the regular business plan. There's nothing here that would cause me to say, hey, wow, there's a fundamental change in the value of this company. Then we go to Sasoil and we do the same thing. So, you know, here we are. There's nothing. Basically, the signal's on 23rd April, and there's just really nothing here. So, no news that would suggest that there's a reason why these two have gone so far out of whack. So that says to me that it's a liquidity-driven event, and that makes for a good pair trade. So from a news basis, check, we're clean. So now let's look at earnings releases and dividend dates. Well, first off, on dividend dates, we can go here. So remember, we're on April 23rd. This share goes ex-dividend May 21st. That's about 30 days hence. And we know that the average days in trade is about 23 days. So do you have enough of a window before there's a dividend blip in your relative performance? The answer is, depends on you. But I would say that that's fairly comfortable. And then the dividend gets paid on June 7th. What happens with Sasoil? Dividend date was already paid March 25th, and I think they only pay once or twice a year, so you know you don't have another dividend date to worry about there. So on dividends we're clear. Let's go to earnings. First off, with Sasoil, they reported earnings on, where are we? In February. There we go. Sasoil delivers strong financial results. Okay, 26th February. They only report every 6 months, so they're not going to report until the end of August, beginning of September. And we're on 23rd April, so we have no issues with any earnings results, earnings releases on Sasoil. On any, we do, and if you see, let me just go forward a bit here. They released on 27th April. So within 4 days of this trade having triggered, there was an earnings release to come up on any. Now, would that make you say don't do the trade? Maybe, because obviously if those results are not expected, the market's going to move significantly. However, there are a few mitigating factors that would lead me to say I'm not too concerned about that. First and foremost, any is an $80 billion market cap, and you know it's a mega cap, so its performance is pretty steady, and people have a pretty good view of what's going to happen. So you don't usually get massive earnings surprises that lead to huge moves in the stock on companies that are this big in industries that are as cash flow stable as integrated oil majors. You know, you can, but that's a mitigating factor. The other mitigating factor is, as we've seen through this trade review, everything looks really good. I haven't seen anything that was a big negative. So, you know, you never get perfection in trading. So I would probably want to go for it. And couple that with the fact that the last trade did well. You know, you've got a flat ratio chart. I don't think I would let that one earnings announcement that's coming up in a week say, no, I'm not going to do this trade. It might change how I position size it, but I don't think it would knock me back from doing the trade. And so the one thing we haven't looked at here is the volatility previous to the entry. And so let's just put the volatility here, redo the pair charts. So volatility, we're up at about 2.4%, and it's gone anywhere from about 1.5 up to about 2.4. It's falling slightly. So this is, normal volatility is sort of, 1.5 to 2, 1 to 2, 1 to 2.2, something like that. A little bit higher than some pairs, but definitely within a normal range. And if you don't like that it's 2.4 versus 1.5 or 2, and if you don't like the fact that there's an earnings announcement coming, you could scale back, and instead of doing 10,000 leg, maybe you do 5,000 or 7,500. Otherwise, size accordingly. And that would be how we would review this trade previous to it happening. Now, what happened in the trade? Let's go to the trading signals. So we went on 23rd April. The exit trade was on the 18th of May. $708.03 gross profit, and it was approximately a 7.1% return on nominal leg value of 10,000 aside, and 21.3% return on CFD equity. That's assuming a 6-to-1 leverage ratio, and that was in 25 days. So again, a very nice pair in the top 30 that's now delivered us this trade and this trade since December, and this is exactly what we like to see. So I hope that was helpful, everyone. That was the trade of the month for May 2018 for the Pair Trade Finder Pro US Top 30 Equities Pairs. Happy trading.